The Nigerian stock exchange all-share index inching slightly up yesterday, but still volumes down. Are investors still sitting on the sidelines on the back of the death of President Umaru Yar'Adua last week?
Good morning. Generally what you see, Mondays tend to be low trading volume days as investors try to reorganize their portfolio. While the death of the president, I don't think the death of the president has much to do with trading volumes. I think people are just trying to reallocate their portfolios. Volumes will probably pick up today as people start to take positions.
Right. Well, yesterday the big mover was, of course, Skye Bank. It moved quite substantially, up 4.99%, just under that 5% cap. Was this on the back of Renaissance Capital's notice saying that the stock is mispriced?
Generally, I think people's expectations of Skye Bank is that they expect them as a middle-tier bank to do well. We've been of the opinion that Skye Bank has quite a bit of upside, and I guess probably the research report released by Renaissance Capital probably circulated. Another thing we think that is probably driving volumes is that Skye Bank has now qualified as a pensionable stock, so PFAs can also include them in their portfolio. So I guess that is probably some of the things driving the demand for Skye Bank. You might also recall that Skye Bank is quite strong when it comes to revenue collection. They do a lot of business with Lagos State and also with River State as well. And so in terms of growth potential, Skye Bank is well positioned, and I think a lot of investors are realizing that and swooping on the shares.
Another bank that was getting a lot of demand yesterday was Diamond Bank, which plans to grow its loan portfolio about 20% this year. On the back of that news, was that the reason why we saw that demand yesterday?
Skye Bank generally...
Diamond Bank.
Investors tend... Diamond Bank. Diamond Bank. Investors tend to generally view Diamond Bank quite positively because they do repose quite a bit of confidence in the management. I'm not sure the drive of the loan book is what is actually increasing the demand, but generally speaking, it's remained flat for some time now. So people are beginning to expect that with AMCON bill now signed by the upper legislative arm, and that will also be then signed by the president, that banks should start to increase their loan books. And we think Diamond Bank and a few of the other mid-tier banks are well positioned to gain from that. But what we've seen is a very cautious approach towards expanding the loan books on the back of what has happened to banks. But we expect that would continue to increase as we go into the second half of the year.
Mm-hmm. I just wanted to get your views on a couple of other sectors as well. This morning we got this notification from Renaissance Capital regarding Nestle, saying that they are revising their rating of the stock to 380 naira from 232, implying a potential upside of 25%. Are we going to see the stock rally today?
The thing about Nestle is that it tends to be quite illiquid, so it also depends on what is available to trade. But generally speaking, it's a well-regarded company, very, very disciplined company, large dividend payouts, and institutional investors tend to like companies such as Nestle because of the predictability. It's a mature company, and generally speaking, if you can find the shares, most people would like to include it in their portfolio. In-house, we are rather bullish on Nestle, but the major challenge is the liquidity of the stock for Nestle. So that's where the challenge lies, because there's just very few of it available, and it's just not enough to go around.
Right, moving over to the oil marketers, we heard earlier that talks between Nigeria and China over Beijing's bid to buy 6 billion barrels of Nigeria's oil reserves have been stalled. And yesterday we saw Oando dipping 1.4% and Mobil closing the maximum 5%, despite impressive results. What are the concerns in this industry at the moment?
I think the thing that tends to drive, or the major issue that will challenge the downstream oil sector, is the issue of deregulation. While they've been reining in, their costs, and they've been doing, reasonably well. But the profitability of that industry is really tied to whether the commitment of the government to deregulate that sector. If you look at Mobil Oil's results, they've bounced back. Their turnover is up, and their profit is up significantly if you look at where they were this time last year. According to what we know about it, they've internally reorganized, and that has really rained down the costs of goods and sales. So we expect that Mobil Oil will do decently well, but you will not see the significant upside in that sector until the deregulation issue is actually tackled. Regarding the upstream sector, there's been a lot of talk about the Chinese and the investment and with the international oil companies. I think that will be resolved in due course with the federal government. But as you know, China is on the lookout for resource-rich countries and to secure their energy requirements. And Nigeria, being the sixth largest producer in the world, fits into the bill. So I think it's something that it's a bit political in nature, but will be resolved in due course. I'm not sure it's directly correlated to the trading of the downstream sector. But what you see, players like Oando, Mobil Oil, Total, they all seem reasonably well positioned. Also, you recall that the government has now committed to paying oil marketers on time for importing petroleum products into the country. That has stalled profitability because of the huge cost of financing. So with that put behind them, we expect that they should do reasonably well this year. But we're still, the big question remains, are they actually going to deregulate that sector?
Right, Olumide, very, very quickly, the central bank holding its MPC announcement today. Are we expecting to see rates on hold?
That's what the market expects, because if you recall, they've held that rate, for the last 4 or 5 months now, and the whole idea is to stimulate lending, and they've put all sorts of facilities in place to encourage banks to lend, but you've seen very slow progress in that regard. There's a 500 billion infrastructure loan, there's a 200 SME loan, and that has not really happened. So the idea was, how do you unlock the credit market? Part of that, the answer to that equation is the MCOM bill, and the challenge is, the hope is once MCON is there trying to buy toxic assets off the balance sheets of the rescued banks, that will stimulate banks to lend.